I was at the San Diego Farmers Market last weekend, and just to the side of the farmers market, there was a couple of people that put up this table advocating and teaching people about socialism. Now, I was looking at this table, and they came up to me and asked me if I'm interested in socialism. Now, I like talking to people with differing beliefs because I always like to learn from people with different beliefs. I think you should always learn from people that disagree with one another because that's how you learn. Real intelligence comes from learning from people with differing beliefs, not just solidifying one belief by calling everybody else stupid. But when they came up to me and asked me if I wanted to learn more about socialism, I said, I'm not too interested, but I'm happy to learn more. So he starts telling me a little bit about how socialism works and how socialism can end world hunger and how socialism can help so many more people because you don't have people that are greedy, stealing profits, stealing money from everyday people. And I said, okay, that's interesting. And that was when he proceeded to try to sell me this book or pamphlet about socialism. Now, I thought that was very interesting. And I asked him, isn't that kind of capitalist of you to try to sell me this book on socialism? And I didn't try to say it in a mean way because I'm just trying to learn from what people are doing. And what he said was, we don't want to go out and raise money from for-profit capitalist organizations. So we want to raise money from regular people. That way we can continue to fund our operations. And I said, well, I run a for-profit company. Would you still take money from me? And he said, yes, of course we would still take money from you because, you're not one of those capitalist organizations. And to me, that just was an interesting remark. And I said, I think it's kind of capitalist of your organization to want to sell your products to take money. That way you can continue to fund your ideas and operations. And that was when the person trying to sell me this book, I think, realized that I wasn't going to buy his stuff. And he kind of just separated from me at that point. But I think this is where it's important to understand what a capitalist system is, because here in the United States, we live in a capitalist system, a capitalist economy, which means if you work a job, you are working a job in a capitalist economy. If you're running a business, you're running a business in a capitalist economy. Now, in today's economy or today's political environment, the word capitalism has really gained a lot of political ammo. But what I think is important for people is if you're working to earn money in a capitalist system, you might as well understand how a capitalist economy works. That way you can understand how you can build wealth in a capitalist economy, because the people that become wealthy in a capitalist economy understand what capitalism means. And the reason why I'm so passionate about this topic was because I didn't even know what the word capitalism was until I was in law school. I had never really understood that term. I heard people talk about it when I was in college, but I never really understood that term. Nobody ever taught me this thing until I went out of my way and started learning about it. I was investing in real estate. I didn't know what capitalism was. I was going out and building businesses. I didn't know what capitalism was. I just heard people politically saying capitalism is good or capitalism is bad. I knew it had something to do with businesses making profits, but that's all I really understood. But truly, in a capitalist system, what that means is you can make money from your labor, or you can make money from your profits, from what you own, your equity. That's what a capitalist system means. And so now when you go to school and you get a good degree and you get a good job, you are making money from your labor. You're going to work in an entity, in a business, and you are getting a salary. That's how you get paid with your labor. But in that company, you're going to have some people that own the company. That might not be the CEO of the company. That might not be your boss. But there are other people that own the company who might not work in the company. And the people that own the company that you work in, they don't get paid a salary. They get paid with profits. And that's what a capitalist system is, where some people earn for their labor and some people earn for their equity. And this is where now it is so important to understand this, because the wealthiest people in this country and the world are earning money not from their labor, but from their profits. They're earning from their equity. They're earning from their assets, because now when you own the asset, when you own the business where people are working to generate money, they're working to generate profits, you can continue to get paid even when you are not working, and there's no limit to how many assets that you can own. And so it's much more scalable versus there's a limit to how many hours you can work in a company. There's a limit to how many days you can work. There's a limit to how much effort you can put in. So there's a limit to how much money you can earn from your salary, but there's no limit to how many assets you can own. There's no limit to how much profit you can generate. Plus, when you own the asset, there can be hundreds or thousands or tens of thousands of people working to drive up the profits, versus when you're just relying on your labor, there's only one you that's working to generate the income for you. This is why investing your money is so important, because when you invest your money, you are diversifying your money away from you. Because when you just have your salary, when you just have your income that's funding your lifestyle, you're one paycheck away from being broke, or one decision away from being broke if you have a big savings account. Because if your company goes bankrupt because the CEO drives the company into the ground, or if you break your leg and you can't go into work, or for whatever reason you lose your job, you no longer have that income. And now you no longer have the money coming in to support your lifestyle, which means if you have a lot of expenses and no savings, now you can be stuck in a very tough financial situation, versus when you own the assets. Those assets can continue paying you even when you're not working. But the way that you can get these assets is not by being born into a rich family, although that can help. It's not by marrying rich, although that can help. It's not by having millions of dollars, although that can help. It's by taking a piece of the money that you're earning and using that to own other assets. And you don't need a ton of money to start. I mean, you can start with as little as $100, and you can start investing in other assets. What are these assets? You can invest in stocks, you can invest in real estate, you can invest in other businesses. There's a lot of different ways that you can do this, but the key is that you have to get started investing in these assets. That way you can win in this economic system. And the reason why so many people hate the economic system is because most of us are never taught how this system works. We're taught to go to school, to get a degree, to get a job, and then wonder why everybody else is rich. Because if other people are rich and you're busting your butt, you're going to wonder, why can't I have that financial freedom too? I'm going to work 6 days a week. I'm putting in all these hours. I'm making financial sacrifices. And then I see other people working less than me that have way more than I do. It doesn't make sense. And this is that basic level of financial education that we're never taught. Wealthy people are working not for a bigger salary, but for more assets. But the average person who goes through the system is working to just get that bigger salary so we can have the nicer things. And you get caught up in that rat race where you're just working to earn more money to drive the faster car. You work to earn more money to have the bigger home. You work to earn more money to have a couple more vacations. And you just keep spinning your wheels in the cycle, but you never have any ability to stop spinning your wheels. You never have the ability to take a break because you have all these consistent, reoccurring expenses, and you need to keep funding this lifestyle, which means you're going to just have to keep working forever in the system. And then hopefully, eventually, you'll have enough money put away in your 401k to be able to retire. But if you really want to become wealthy, you're going to have to be more aggressive with how and where you invest this money. That means instead of using your raise to finance a newer car, using the raise to invest a little bit more aggressively so you can own more assets. And now if you want to do it even more aggressively, you're going to have to work to earn more money. Maybe that means getting a second job. Maybe that means working to create your own business. Maybe that means creating a side hustle. Getting more income, not so you can have more things, but so you can own more assets. That is the way that you win in this economic system, period. And this is where now, if you understand this, it's going to change the way that you think, because you have to understand how this system works. See, the shareholders, the owners of a company, they're the ones that make the shots. And the executives, your boss, the CEOs, the C-level executives, they're the ones that are trying to please their boss. Who is their boss? Because yes, your CEO has a boss. Their boss is the shareholder. So the CEOs and the C-level executives have a duty not to please their employees. It's not to please their customers. It's to please the shareholders. How do you do that? By making the company more valuable, by increasing the profits, by increasing the market valuation of the company. How do you do that? Well, you got to get more customers. You got to make the customers happy, and you got to make sure the employees are producing good products for the customers. So this is where now, when you understand the system, you will realize that as an employee, you get your labor. And unless you get equity, you don't own the company, which is where now you need to own the company. In America, every single person needs to be a business owner. But that does not mean that everybody should be a business operator. That does not mean that everybody should start a business. And that does not mean that everybody should manage a business. In fact, most people should not. So how do you own the business? without operating it, starting it, or managing it by going out and investing in other businesses, by being a shareholder, by being the investor, by owning the equity in other assets, whether it's stocks, whether it's real estate, whether it's startups. You need to go out and invest in these assets that are working to produce more value. That way your income and your wealth isn't just reliant on your skill set, because your skill set is fleeting, but there's no limit to how many assets and how much you can make and how much wealth you can build from these assets. Now, once you start investing your money, the next thing that you need to understand is that your investments will not always go up. In fact, in our economic system, we see booms and busts. Pretty much every decade for the last century has seen some sort of recession or market crash. Why does that happen? Because people start investing their money into an asset class. This asset class becomes overvalued, it becomes overheated, and then eventually people realize, oh, this asset is worth way more than what it's actually worth, causing some people to sell. Then when it starts to sell, you see this asset class start to fall. As this asset class starts to fall, people start to panic and to sell even more, and then it gets oversold. That's what creates these booms and bust cycles. And then you have the media, which perpetuates the top and the bottom. The traditional media, who says that nothing bad can ever go wrong when things are going up, that the market is great and everything will continue to be like this, getting more people excited to put more money into the markets. And then when things are going wrong, the traditional media will tell you about how the world is ending and how you need to get out while you still can. This is why you want to make sure you're making your own financial decisions instead of just blindly trusting any news. That's why in Market Briefs, our goal is really to create a news source where you can learn what's happening in the financial markets without being bombarded with all the sensationalism and the emotion, because all of our news is in that one email. If you have not joined Market Briefs yet, you can go to briefs.co/market. That's briefs.co/market. And I also got the link for you down in the description below. The Federal Reserve Bank is officially starting to pivot. Jerome Powell has just taken his foot off of the interest rate accelerator with the first interest rate pause in 15 months. And this comes at a time where inflation is still running hot. Now, the interesting thing about the Federal Reserve Bank's latest move was that Jerome Powell still said that you need to be prepared for more